When Trump Media first pitched itself to the public, the premise was straightforward. The company presented itself as a direct challenger in the social media space, built around the Truth Social platform, where it would drive user engagement to generate standard advertising revenue. But this chart comparing Trump Media's second quarter earnings for 2026 tells a completely different story. You can see their actual operational revenue came in at a modest $1.7 million. That figure is immediately eclipsed by a staggering $238.1 million net loss. The market reacted to that earnings report instantly. Selling pressure pushed the stock to an intraday low of $9.10, ultimately forcing an 8% drop in the share price. A loss that large doesn't happen simply because users stop logging into an app. The deficit points to a chaotic business mutation happening completely out of public view. When losses outpace revenue by a factor of 100, the company's financial survival depends on a strategy far removed from its original pitch. Rather than investing its capital into making Truth Social a better product, Trump Media quietly transitioned into a digital asset reserve, hoarding cryptocurrency. In a single bulk purchase, the company added 4,661 Bitcoin to its treasury. That acquisition pushed its total holdings to over 12,000 Bitcoin, vaulting it past companies like Tesla to become one of the largest corporate crypto holders in the world. This line graph plots Bitcoin's falling price against Trump Media's Q2 balance sheet to illustrate unrealized losses. As the crypto market dipped in early 2026, falling prices dragged the balance sheet down, generating a $360.6 million deficit for the company. By tying their financial health to a highly volatile digital asset instead of an operational product, Trump Media placed its entire valuation at the mercy of unpredictable crypto markets. The strategy only gets more tangled from there. Interim CEO Kevin McGurn publicly stated the company was going to pivot to invest more time and resources back into Truth Social. Almost immediately, they launched a niche data service called Truth API. This service targets high-frequency trading firms, charging them up to $100,000 every single month for access to data from influential accounts on the platform. At the exact same time, management canceled a proposed crypto treasury venture with Crypto.com while continuing to pursue a merger with TAE Technologies, a fusion energy developer. Wall Street punishes confusion. When a single firm operates a social network, hoards cryptocurrency, sells expensive API subscriptions, and funds experimental fusion energy, investors flee. Compare that erratic approach to Riot Platforms. Riot is a digital asset company that also found itself facing declining revenues from its core operation, which in their case was Bitcoin mining. But Riot chose a highly specific alternative. Instead of buying up random assets, they looked at the massive physical energy infrastructure they had already built in Texas to run their mining rigs. They leased that exact physical capacity to the AI firm Anthropic. The result is a 20-year data center lease expected to generate roughly $9.1 billion in contracted revenue. This split-screen chart tracks how the market reacted to these two very different strategies. On the left, Trump Media's confusing pivot resulted in an 8% drop. On the right, Riot stock surged 5% on the news of a guaranteed multi-billion-dollar contract. Investors will support a company abandoning its original business model, provided that the new direction leverages existing infrastructure into clear, mathematically sound revenue. That brings us back to Trump Media. It operates less like a traditional tech company and more like a corporate chimera made of mismatched parts. It operates a social media app with minimal revenue, sells high-priced data to trading firms, functions as a massive cryptocurrency holding tank, and acts as an early-stage investor in fusion energy. Holding DGT shares effectively serves as a direct position on the price of Bitcoin and the shifting priorities of its leadership. The paths taken by Trump Media and Riot suggest a trend where specialized tech firms survive by transforming their balance sheets into high-risk portfolios of unrelated bets.